In this video, I'm going to show you 5 beginner mistakes to avoid on trading 212 that could potentially save you thousands of pounds. The first and probably the most common mistake I see beginner investors make is investing into hype stocks. A notable stock that comes to mind in recent times is NEO, which is down around 50% from its all-time highs. And in general, I think stocks that you see reoccurring on platforms such as Reddit and Wall Street Bets are usually ones that you probably shouldn't invest into. Or stocks that you see pushed a lot in TikTok comments, which again are usually beginner investors investing into hype stocks. The second mistake, and probably the most vital one, is I see people open the Trading 212 Invest account instead of a Stocks and Shares ISA. A Stocks and Shares ISA basically allows you to invest completely tax-free, which over the long run could save you thousands and thousands of pounds in taxes. Whereas if you open the normal Invest account, you will be liable to pay tax. If I could recommend one thing when you do set up your Trading 212 account, make sure it is the Stocks and Shares ISA. Now moving on to the third mistake that I see beginner investors make, and this is using the CFD account. Now 90% of people who trade CFDs do actually lose money, and it is basically a form of short-term trading. So with probabilities against you like that, I just don't think it's really worth it unless you just want to have a bit of fun and would spend the money at the casino anyway. The fourth mistake that I see beginner investors make is investing into penny stocks and trying to day trade them. Now in theory, it sounds like quite a good idea investing into penny stocks, as they're a lot cheaper than normal stocks and they're also a lot more volatile, which means the potential to make money is there. In the long term, most companies don't actually survive, and a lot of penny stocks will lose most of the value, like this one on screen here. In the short term, you may get lucky and make some money from day trading, like I did when I started in 2020, when I made over £1,000 in a single day trading med stock. But in the long run, this isn't sustainable, and I definitely would recommend it. And the fifth and final mistake that I see beginner investors make on trading 212 is not understanding how to read the fundamentals of companies. Now, you don't need to be an expert, but I do think you should understand some of the basic terminology. As personally, I think when I started to understand the fundamentals of companies and how they affect the stock price, then it really helped me to become a better investor. Now, you can use Google Finance to look into the recent earnings of stocks, and from this you can get a general idea of how the company is doing. For example, on screen here, this is Tesla's most recent earnings, and as you can see, they didn't do very well, with their net income down 70% and their net profit margin down 67%. Now, you don't need to be a genius to work out that if a company's net income has dropped 70% in a single year, then it's probably not the best investment. And if a company is running at a 2% net profit margin, that is extremely low. If you did find this video helpful and want to see more Trading 212 tutorials, make sure to follow my page and double tap the screen.